From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston, back in our Manhattan studios finally. But right now, let's get a check on the markets. For that, we turn to Abigail Doolittle. So, Abigail, stocks are up a little bit right now, but I wonder if the bigger story really isn't what's going on in the dollar.
Yeah, the dollar is a huge story today and really over the last few weeks. Great to have you back in studio, David. And relative to the dollar, it is absolutely getting decimated, testing a 10-year uptrend of support, barely hanging on. All sorts of cross-asset ripples happening from this. Now, at this point, we have stocks well off the highs, but we do have gains for the major averages. The S&P 500 up about 0.3% earlier, up much more. The NASDAQ up about 0.7% earlier, up more than 1%. The New York FANG Index earlier had been sharply higher, now just about flat. All of this as gold is surging and the dollar lower. So a bit of a dangerous relationship here, David. All eyes on the Fed on Wednesday, how they're going to handle all the different relationships that they have to. But at this point, when you have money, that weak dollar, it has fueled stocks going higher and gold and the other precious metals going higher out of the March highs for the dollar and the March lows for the risk assets along with the precious metals. But as investors turn simply to the precious metals and the gains for stocks cool off, it creates a little bit of an interesting relationship, perhaps a dangerous one.
Exactly, Abigail. It's hard to imagine the Fed this week is going to say very much. It's going to strengthen the dollar as a practical matter. And we've always said there is no alternative. Maybe there is an alternative, and it's gold. Alternative to stocks, I mean.
Well, the problem, and I agree, in terms of the meeting this week, it's very unlikely that they're going to say all that much. They may set the ground for what could happen this fall in terms of actual policy moves. But in terms of dollars going into gold, if you think about it from an allocation perspective, if all of the dollars and fresh dollars that investors have, or as they take chips off the table from the big tech names, go into gold, it could create the kind of headline where you have gold surges again, but tech stocks down. Not great optics, something similar to what we saw in 2011. Hopefully it doesn't happen, but it is an interesting relationship to keep in mind. And of course, this week, David, we have some of the big tech executives going to Washington, or at least testifying, whether virtually or possibly in person. I'm guessing that it's virtually. But later this week, huge earnings reports. And into that, David, we have the likes of Apple, Amazon, Facebook, and Alphabet down sharply. So again, a little bit of a rough patch here for big tech, but not so much for gold or silver surging.
Tech is certainly going to be in the headlines throughout the week. Thank you so much to Abigail Doolittle for that report on the markets. Well, it's going to be a big week for the U.S. economy, and with the Fed issuing its latest monetary policy decision on Wednesday, and then GDP numbers for the second quarter coming out on Thursday. We welcome now Michael Gapen. He is Barclays' chief U.S. economist. Michael, thank you so much for being here. Let's start with the economy. I know it's the second decision, but it may inform some of what the Fed does or says. So where are we with the economy right now, in your judgment? We've gotten some conflicting signals.
Well, certainly I think we've emerged from lockdown with a lot of the economy performing kind of in line with the V-shaped recovery, meaning we got a very quick snapback in the good side of the economy. Household spending came on strong. We had a snapback in a lot of durables consumption, including autos, and that really pushed the May and June data higher and stronger than many people had expected. I think when we get this data later this week, we're probably going to find that household spending, at least on goods, is about where it was in February. So what that means is going forward, if we're going to get beats to the upside or continued economic growth, we need it from services. So therefore, it's likely to be more challenging from here. So if it's okay to say this, I think the easy gains have been made in the sense that parts of the economy that are less COVID affected have bounced back. Looking forward, we're going to need it now to come from services, and a lot of the services sector is more COVID affected. So the spread of the cases in the South and the West are likely to mean that July and August data flow is more uneven.
Yeah, and Michael, as you suggested, we had durable goods numbers today that came in with a nice surprise to the upside. A lot of it was motor vehicles, as you suggested. At the same time, when you turn to services the way you're talking about, Michael, that really gets into other sorts of data to look at, things like mobility, and that hasn't really picked up so much in the United States, has it?
I would say that's, I look at the Dallas Fed Mobility and Engagement Index. They show this across states, and you can drill down to the county level as well. And I think the upshot from there is to say we've recovered about half of the mobility that we lost during the shutdowns. Getting the second half on average will be more difficult. So yes, we have seen a leveling out in mobility trends in July. So we were all locked down in April and May. We started to move around more. That came quickly in June. But as we've gotten into July across many states in the South and the West where COVID cases have accelerated, mobility has been more stagnant. Again, it doesn't mean that we can't continue to grow. It just means it'll be harder, and we need progress in terms of fighting the virus on average to keep mobility moving higher.
So, Michael, put yourself in the position of the FOMC as they have the meeting starting tomorrow and then their decision on Wednesday. As they look at the data that you're looking at, what are their options at this point? Is there much more they can do to really instill some of the confidence in the U.S. economy that we've lost?
I mean, not really. I think actually they have a fairly simple job at this meeting, which is that the data has looked better in May and June. You need to acknowledge that. I think they will. But looking forward, COVID is still circulating around the country. Uncertainty is still high. So there's no need to be thinking even about declaring victory. The Fed was very clear in its communication in June about what appropriate policy was, and that was no foreseeable rate hikes in the Fed's future. I don't think that message needs to change. So I think July is a low hurdle for them in the sense that their communication was well received by markets in June. I think they just need to repeat that. Yes, the data's been a little bit better, but there's a lot that's still unknown about the economy, and we're not going to know that for some time. So I think it's a status quo meeting.
Michael, I can't talk to you about the Fed without talking about yield curve control. Is it coming? There's been some suggestion about that. Do you expect anything to be said about that this week?
We don't. I mean, at the July meeting, they will certainly be discussing the framework review. They're near the conclusion of that. But I think if we look at the conversation in the June meeting, the minutes to the June meeting, there's still a lot of skepticism and more questions than answers about yield curve control. I think they will keep it in their back pocket. It is on the list of tools that they could use. But right now, markets are not pricing rate increases for the next 2 to 3 years. And as long as that's the case, I wouldn't expect the Fed to bring out yield curve control. Now, if the economy continues to recover, inflation picks up and markets start pricing in hikes, and the Fed does not want that, and it's finding that its dot plot isn't successful at reversing market pricing, then you could see yield curve control. But right now, no. I think it'll stay on the list of possible tools, but we won't see it in the near future.
Michael, Fed is always about monetary policy. There's another little fiscal issue pending right now up on Capitol Hill. Supposedly the Republicans are going to come back with their proposal on fiscal stimulus. What does the economy need out of Congress right now?
The way that I would characterize it is we need a longer bridge. We need a longer bridge to the other side of the COVID outbreak. So it's still about disaster relief more than it is, say, traditional fiscal stimulus. I think what the economy needs is additional support for household balance sheets. The Republican and Democratic plans will likely include rebate checks, some additional unemployment benefits, and probably some revamped payroll protection or paycheck protection to keep household balance sheets relatively flush. The second thing that I think we need that is not in the Republican bill but is in the Democratic bill is aid to state and local governments. I do think that's important because right now states are setting budgets for the next fiscal year. We're likely to see extremely large cutbacks in essential services and perhaps more layoffs if we don't get aid to states. So I do think what we need is a longer bridge, a little more wage and salary replacement to keep the economy in some suspended state of animation. I think phase 4 should look to take the economy, say, through November in terms of that support.
Well, just quickly here at the end, Michael, which is more important, the length of that bridge or how high it is? Because we're talking about between $1 and $3 trillion. Is that the important thing or just how long that bridge is?
I do think it's a little bit of both. Sorry to be a two-handed economist on that one, but a length of time to get us to November, I think, is important. And I think we're probably looking at something around $1.5 trillion, given the midpoint of close to the midpoint of the two potential bills. I think that should be sufficient. So that size, as long as it's between the $1 and $3 trillion that the House and Senate have in plan, I think that size is appropriate and at least get us kind of 8 to 12 weeks of additional assistance.
Michael, always a treat to have you with us. Thank you so much. That's Michael Gapen. He is Barclays' chief U.S. economist. Coming up here, less than 100 days to go now until the election. We're going to talk with Bloomberg political contributor Rick Davis about how steep a climb President Trump has ahead of him. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for First Word News. And for that, we go to Mark Crumpton.
David, Senate Majority Leader Mitch McConnell will unveil the latest Republican coronavirus relief package later today. Bloomberg has learned the plan will cut supplemental unemployment benefits from $600 to $200 to give laid-off workers about 70% of what they'd been earning before the pandemic. Democrats want to continue the $600 payment through the end of the year. President Trump's national security advisor, Robert O'Brien, has tested positive for COVID-19. The White House says there is no risk to President Trump or Vice President Pence. Bloomberg has learned O'Brien believes he caught the virus from a family member. He's been isolating at home while still running the National Security Council, doing most of his work by phone. In baseball, the Miami Marlins have canceled their home opener against Baltimore because of the coronavirus. At least 8 players have tested positive in recent days. It's Major League Baseball's first game to be canceled due to the virus, and it comes just 4 games into a shortened 60-game season. Meantime, the game between Philadelphia and the New York Yankees also has been canceled. The Yankees would have been in the same clubhouse the Marlins used over the weekend. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Well, we're now less than 100 days away from that election in November, and the poll numbers continue to come in worrying ways for President Trump. But today's the day that Mitch McConnell, the majority leader, is due to introduce his proposal on fiscal stimulus. Could that help the president and the Republicans come fall? We welcome now Rick Davis. He's from Stone Court Capital, and he, of course, is Bloomberg political contributor. So, Rick, can they turn this thing around right now and make this stimulus a success, even though the Democrats are out ahead of them and they have a bigger number on the table?
Yeah, the Democrats clearly are trying to put a much bigger number on the table, but Republicans realized, I think, a little bit late that they had to continue the stimulus at least through the end of the year, and certainly through the end of the election. And so that's what you really see Mitch McConnell and his team coming back with, is a stopgap proposal that is going to try and do a lot of different things, but also be very political. One of the things that will be overlooked by most economists is the changes that they're trying to make on education policy, encouraging school choice, which is something that Trump would like to brand as a campaign theme, but really is, I think, by the Democrats' evaluation, going to be much off the mark when it comes to having to support people around the stimulus.
Is that one of the things we're going to definitely see on the Republican proposal, which is, forget about state and local government generally, there's going to be money for schools no matter what?
Well, the question is, is it the money for the schools or is it money for the students? This is a Republican versus Democratic approach. Democrats want to put money into schools and teachers, and Republicans want to put money into the pocketbooks of the parents so they can make choices for the students. It is confusing today when you look at all the myriad of options that people have to educate their children this fall, whether it's all electronic education or partial or all participatory. And in order to bridge that gap, what Trump has been pushing is to put money as much as $10,000 a student into the hands of the parents so that they can make choices. Some see it as putting the elephant's tusk under the tent when it comes to school choice in the broader debate of public versus private. But nonetheless, I think the Trump campaign and the Trump administration see this as a winning political issue.
Well, and that's my question, really. Playing it from the president's point of view, how does he turn this around? Because it's pretty consistent now, the polls coming in showing he's behind, including in key battleground states.
Well, we see him actually trying to change the topic, where he was sort of a denier on coronavirus for some time, refused to wear a mask, wanted to put reopening ahead of public health. We've seen a huge turnaround last week in that regard, promoting on his Twitter account people to use the mask, canceling the rally that was slated for his convention at the end of August, and really trying to get on the other side of the coronavirus debate that many people believe has contributed to the deficits that he now has in literally every battleground state. When you look at the current polling for the last 2 weeks, Joe Biden is now ahead in virtually every battleground state. When you look at the toss-up electoral vote states, Biden is ahead in almost every one of the toss-up states. giving him a huge advantage going into the fall election.
So Rick, you, of course, were on Senator John McCain's campaign for president, as well as many other campaigns. For President Trump to really emphasize dealing with the coronavirus, that's playing for a tie, not a win, right? He's not going to beat Joe Biden on that. Where can he beat Joe Biden and get votes back to him?
Well, I think part of it is he wants to try and outflank him on this education issue, which right now is a very high priority for most families. And he needs to find a way to have a conversation with suburban women. And of course, education is a very big issue for suburban women. He's done 3 years of basically divorcing himself from those women. And now he's under pressure to try and find common cause. So that's one of the reasons why I think you see this issue popping up. Two, I think he's trying to get some of those unemployment numbers back to something reasonable. And of course, he looks at the education issue as a forerunner of unemployment. There are over 5 million parents who can't go back to work right now, even if they could, because their kids are right now not planning on being in class in the fall. So he sees that 5 million as a target group and saying, I want to get you back to work. I want you earning an income. And so if I can get your kids involved in a school program, I have a chance of you coming back, and that would improve his unemployment numbers. So it's kind of a two-for issue for him.
So Rick, whether or not the president is trying to not divorce the suburban women, he seems to be divorcing a fair amount of the mainstays of the Republican Party. The Reagan Foundation yesterday, Paul Ryan, the former Speaker of the House, even Fox News he went after in a tweet. What is the strategy there? I mean, why start shooting at your own side?
Oh, he never saw a fight that he didn't want to engage in. And the Reagan Foundation one is incredulous. Now, for years, decades, I would say, the RNC has had relatively unfettered access to the images and quotes of former presidents. In this case, the Reagan Foundation objected and say, look, this coin that you're trying to fundraise for Trump's reelection should not carry the picture of Ronald Reagan on it. And normally this would be a one phone call, no problem, we'll kill the project and move on. The fact that Trump would tweet about it and attack the foundation really escalated something that should have just been a no-brainer. And then to throw in the fact that Paul Ryan's on the board of Fox News, and maybe he didn't like some of the polling that Fox put out on Friday, again showing him behind in 3 key battleground states, just seems to be missing the mark. I mean, his opponent is not Paul Ryan or Fred Ryan, the head of the Reagan Foundation. It's Joe Biden, and it's just another good day for the Biden campaign where they can say, hey, look, Donald Trump's attacking his own party instead of us. That's a good day.
So, Rick, we still have just under 100 days. We have to keep saying that's a long, long time. You know better than anyone in a political campaign. At the same point, at what point do people down ballot, some of the people running for the House, some of the people running for the Senate on the Republican side, start saying, you know what, I have to sort of distance myself from this president. I can't run with him because he might take me down?
Yeah, there's a lot of second guessing going on right now. And of course, part of that conclusion is how badly will he react if I don't show up at his rally or don't endorse him publicly in the interim. Donald Trump is not one to take these slights lightly. In the past, presidential candidates, I worked for the Bob Dole campaign, and by September of the general election, he was out campaigning for those down ballot candidates, even at a time when he knew in districts that he was never going to win, but he wanted to help. And Donald Trump's not that guy. He's going to basically throw the Republican Party under the bus if it means he can win re-election. His construct is what's good for him is what's good for the party, not the other way around.
Okay, thank you so much. Always a pleasure to have you with us. That's Rick Davis of Stone Court Capital. He is a Bloomberg political contributor. Still ahead, will Europe's economy have a stronger recovery from the crisis than we do here in the United States? We pose that to a member of the European Parliament and economist, Irene Tinagli. That's coming up next on Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Stock of the Hour, except it's not a stock, it's a commodity. It has to be gold today, reaching new record highs. And here to take us through why that's happening is our chief markets editor. She is Scarlett Fu. Scarlett, what is going on?
Oh, well, David, I mean, this is a story that's been going on for a couple of weeks here. But today we did see gold reach a new high. The next stop is $2,000 an ounce. Of course, we did surpass the highs we saw in September of 2011. And we see both gold and silver on a tear here. Now, the stock of the hour, if we had to pick one, would be GLD. This is the biggest gold ETF. It's trading at a 9-year high. And GLD tops the leaderboard in flows. Last week, it attracted $1.3 billion in flows, bringing year-to-date flows to more than $18.5 billion, the second most after the Vanguard S&P 500 fund. Why now? Well, we've got the Federal Reserve meeting this week, and the central bank will almost be guaranteed to signal lower for longer. A lot of investors are interpreting that to mean lower forever. That is weighing down on the dollar. Weaker dollar, stronger commodity prices like gold. In addition, you've got the new COVID outbreaks across the United States and, of course, renewed U.S.-China tensions. So in the same regard, we're also seeing Bitcoin get a bit higher as well. Bitcoin trading above $10,000 at the moment. Now, within the S&P 500, if you're looking for companies, Newmont Mining is the only gold miner there. It is higher, seventh day of gains to a record high. Also, among foreign company stocks, common stocks traded in the U.S., 9 out of the 10 most actively traded are gold or precious metals miners, and you can see some of the names right there. David?
Okay, so Scott, when you talk about a weaker dollar and people buying gold, traditionally one would think that's a hedge against inflation. Now, inflation hasn't been anywhere for a long time. Should we be looking out for the possibility of inflation, at least down the road?
Well, people are definitely talking about it. All that massive fiscal stimulus has got people worried that there will be inflation down the road. It's been deflationary so far, but we've seen break-even rates start to creep higher. And bond yields are negative on a real basis when adjusted for inflation. So you've got negative real yields adding to the situation. One thing to note here, even as we talk about gold prices heading to new record highs and potentially getting to 2,000, on a nominal basis, yes, they're at a new level. But when you adjust for inflation, they're still below the levels we saw in 2011 and far below the levels that we saw in the 1980s. So there is room to rise further. And that's why you see a lot of the analysts projecting higher prices for gold. Bank of America, for instance, sees gold getting to $3,000 over the next year and a half. UBS a little bit more conservative, forecasting $2,000 by the end of September. 2,000 is definitely the next level to watch. We don't know whether it'll happen in days or in a couple of weeks. A lot of talk there about how there might be some consolidation in the weeks ahead before we eventually get to that 2,000.
Yeah, everyone is turning into a gold bug, as far as I can tell. Yeah. The whole world has turned into a gold bug. Thank you so much to Scarlett Fu. She is our chief markets editor. Coming up here, we are trying to get a stimulus package through Congress. Well, Europe, they already have their fiscal stimulus. We're going to talk with an economist who's a member of the European Parliament. She's Irene Tinagli, about the state of the European economy and what this new fiscal package will do for Europe. Does it really need it? Is it already ahead of the United States? That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. The coronavirus pandemic continues to spread around the world. The World Health Organization says the number of cases globally has doubled over the past 6 weeks. There have now been nearly 16 million confirmed cases with more than 640,000 deaths worldwide. The head of the agency said today, quote, "We are not prisoners of the pandemic. Every single one of us can make a difference," end quote. German health officials are worried about a new cluster of coronavirus cases after an outbreak at a farm in Bavaria. More than 170 out of about 500 workers at a local farm tested positive. Health officials are stepping up testing and putting the workers under a mandatory quarantine. The House Judiciary Committee will hear from Attorney General William Barr tomorrow. The AG is accused of politicizing the Justice Department to back President Trump on any issue. Democrats are expected to focus on issues such as how Barr has handled the prosecution of Mr. Trump's allies, including former National Security Advisor Michael Flynn, as well as his recent abrupt decision to fire the U.S. Attorney in Manhattan. They'll also examine his role in using federal forces to suppress protests against racism and police abuse. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. European leaders agreed to a historic joint fiscal stimulus package of 750 billion euros last week to support a European economy that already may be showing some signs of recovery. We welcome now economist Irene Tinagli. She is a member of the European Parliament, where she is chairwoman of the Economic and Monetary Affairs Committee. So, Irene, thank you so much for being with us. Let's start with your appraisal right now of where the European economy is. As I say, there are some things being written in the United States, at least, that maybe Europe's ahead of the United States.
Definitely, we are ahead in the way we are, having the virus under control. So we are not in an emergency anymore, and we can start planning the recovery, the plans for, investments, for new projects, for, the recovery plan, as you've heard and as you described. So we are investing a lot of money at the European level. Yes, there are a few hot bets, a couple in Germany, one in Spain, but we've learned our lesson. We are taking care of them, and then we can continue planning for the recovery and for the investments. So in that way, I feel we are ahead.
One issue is the public health urgency in controlling any hotspots that develop. Another is the confidence of people, particularly consumers, that it is controlled. How does that stand in Europe right now? I know here we look at a lot of things like mobility numbers, about are people going out to restaurants, are they going out to shops? What does that show in Europe?
Well, there is a recovery, but mostly within countries. So it's still difficult to have the confidence to cross borders. So, for example, in Spain, which is very touristy, you don't see, or in Italy, you don't see that many foreigners. But Italians within Italy, they are moving. As well as Spanish within Spain. So of course, tourism is still pretty bad hit. But the confidence of the citizens is slowly going back.
And what about some sectors, such as travel, for example? And we just had news today about air travel. It's really hurting a lot of the airlines badly. Well, how are you doing with things like hotels and restaurants and travel?
Well, those are, of course, the most severely hit, and the sectors that we are also helping with the public policies. That's what many governments are doing, trying to support these industries and these sectors that are, hit not because of a lack of competitiveness, but because of something that hits from outside. So we hope that we will be able to recover by the end of the summer some of the industry. But of course, it's really hard to predict when it will be a full recovery. So far, we are managing with some, sound public policies, and we hope that it will not last that long.
Well, one of those public policies, as I say, is this 750 billion euro fiscal package, really unprecedented, particularly because it's across all the countries. It's not specific to any country, and all 27 got together and agreed on it. Describe that for us and why that is so important for the European economy right now.
It is extremely important because, first of all, it recognizes that it's a union where all the countries share the same destiny and share the cost of the recovery. We've all been hit. Of course, some countries more than others, but we know that our economic future depends on one another. So it was a high, also symbolic. Of course, it's a massive in the amount, but it was important to show this kind of solidarity and the idea that we cannot get out of it individually, that we have to act as a real union. And so for me, this was extremely important. Many people didn't bet on a dime on this and say it would never happen. It happened. It is happening. Of course, this doesn't mean that we don't have, challenges ahead. We do have them, but we are equipped to deal with them, I think.
Give us a sense of the timing on this. I mean, back here in the United States, we have something called the Payroll Protection Program. They got that money out the door right away. When will these 750 billion euros start hitting the streets, as it were, really getting into people's pocketbooks, getting to companies?
Okay. Most of the European programs will actually, start rolling in 2021, of course, probably in the spring. But right now, what is happening is that individual members, states, they are supporting their own economies. They are supporting employment schemes, and they are doing that with the support of the European Central Bank, with the support of other European instruments like SURE. There are some instruments that we've put in place to support the single member states to deal with the immediate emergency and with the immediate cost of the crisis. The programs and the 750 billion, they will come next year to support the full recovery. So for the emergencies, we are using mostly national budgets. And the European budget and funds will kick in when the national resources will be so stretched, and we need some European intervention. That was the logic.
Irene, as you say, this is a remarkable feat. To get 27 countries to get together on anything, basically, is quite a feat. At the same time, as I understand it, there are some provisions in there, actually, about reforms that are expected of some of the countries getting the money. And is there essentially a veto? Could some countries, I'll pick one at random, the Netherlands, which was pretty difficult in the negotiations, could they hold some of this up?
Not with the current agreement. So no country has a veto power. But of course, there is the council that will have to approve or to look after the programs and vote the majority, qualified majority vote. But it's the Commission that retains the power of monitoring and controlling how the money is spent. So it is the European institutions, the European Commission, that will monitor how the money is spent, that will make sure. I mean, reforms are important. If we want to have a sound recovery, of course, every country will have to change a little bit and make sure that the money is well spent. I mean, this is a legitimate ambition for all of us, not just for the Netherlands. All the European countries want that, but it's the European Commission that will check on that. The countries will, work together, but there is no veto power of no single country.
Irene, you've talked about the economic significance of this. What about the political significance? There are people back in the United States who liken it perhaps to what Alexander Hamilton did when we founded the country and basically said the federal government will take over the debts of the individual colonies. Is this moving more toward a federal system, at least when it comes to monetary and even fiscal policy?
Well, that's what many of us are hoping. I mean, it's definitely a progress. So we are moving forward towards a greater fiscal integration. In the package, there is also this idea of increasing own resources of the European Union. So it's an ambition for future budgets. Our budgets are still very limited. So this is the ambition. This is what we are moving towards, at least what we hope. But of course, for the moment, for the time being, this is a huge step forward, but limited to the crisis and the recovery. But I think that if this, as we all think, will work out well, I think this will be the basis for future progress in that direction.
But is the next step, Irene, almost necessarily having some more centralized control over the spending of the individual countries?
Well, of course, we already have a lot of control on, the European institutions. They control, they monitor, they issue recommendations on how countries are spending their money, on what kind of reforms they should undertake, what's been done. So of course, I mean, it's a two-way, direction. So we have to, if we want to increase fiscal integration, we will have to increase the economic policy integration. It takes time, but I think that the rewards will be there.
Okay, really appreciate you being with us. It's a great treat to get to talk to you. That's Irene Tinagli. She is chair of the European Parliament's Economic and Monetary Affairs Committee. Coming up here, the U.S. confrontation with China has some people worrying about a possible new Cold War. We talk with Sim Tak of Stratfor about how China is positioned for that sort of conflict. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Trump has made a policy of confronting China, particularly on trade and national security. But then on the other hand, President Xi of China is also more assertive globally than his predecessors were. Welcome now Sim Tak. He's global analyst for Stratfor. which is a RAIN company. So welcome, Sim. It's great to have you with us. Let's start with some of the hot news, as it were, in more ways than one, and that's the Chinese-Indian conflict up there in the mountains. Give us a sense of where that stands right now.
So exactly what we're seeing right now is that after the initial large Chinese military push into the region of Aksai Chin or Ladakh, or however you want to call it, we've seen some mediation taking place between India and China that has led to a de-escalation, some initial withdrawals on the immediate line of actual control between them. But of course, the tensions are still there. Earlier today, there were reports of India pushing additional heavy military equipment up to the north. Chinese forces are still located all over the Ladakh area. So we'll have to see how exactly that progresses. But of course, all of this is part of a much broader competition between India and China over their borders that stretches across a much wider area and has been going on for many, many decades.
Well, that's what I was going to ask you about, because those of us who don't know that geography the way you do think of it as, well, there's one particular border, maybe a mile or two, and there's a dispute over it. But is China positioning itself much more broadly across a very long border between India and China? And how are they doing that? What assets are they putting in place?
So what they are doing is specifically in Ladakh, in terms of assets that they are bringing forward, is very broad. So there we see them pushing a lot of infantry, armored vehicles, artillery, and every kind of support infrastructure that requires. But when we're zooming out and looking at the entire border region, so from the part of China that borders Jammu and Kashmir all the way down to the other side of Tibet, effectively, where they border the Indian region of Arunachal Pradesh, which sits on the other side of Nepal and Bhutan. Over that entire stretch of the border, we see India very actively, over the past several months or years, upgrading their military infrastructure. So we're specifically talking about air bases and air defense positions there. But China is very rapidly adding additional positions, expanding the capacity of particular air bases so they can host additional fighter aircraft. And this is a clear sign to us that China is preparing for a very long game, a very long competition into the future, where they expect that situation with India to heat up or even escalate into conflict at some point.
A long game, but also perhaps a broad game, because we also have the developments in the South China Sea that China really has built out there. We run destroyers and cruisers past there periodically. They threaten us with them. How is China positioning itself in that region at this point? And I'm talking about in terms of military assets.
Exactly. The South China Sea actually follows a very similar pattern, or perhaps we could say that the developments on the Indian border follow the pattern that we've seen in the South China Sea over the last several years. But what China is doing effectively is positioning military assets in such a way that they generate a deterrent capacity in particular regions. So what that means is effectively they are building their air bases on remote islands, or even constructing specific islands to build their air bases on, and deploying their navy into these areas, effectively demonstrating the Chinese military is at home in this part of the South China Sea. We control this area. If you want to take it from us, you're up against a considerable force. And that's similar to what they're doing on the Indian border, where they are, very visibly pushing that large force forward, as if to say, we are ready for this fight if you want to take it that far.
How do the people around China react to this? When you've got Vietnam, you've got the Philippines, goodness knows you've got Taiwan, and you have India now. What's the reaction of the other countries who are much closer to China than we are here in the United States?
Well, different countries are reacting in their own specific ways, of course, but in general, I think we're seeing great concern from most of these countries. You mentioned Taiwan. Taiwan has been very, very concerned in the past year over, different hints that Beijing has been dropping towards their potential capacity to actually invade Taiwan. And of course, Taiwan itself being much, much smaller than China would depend heavily on its external allies, including the United States. It's starting to look for that outside support. In India, we've seen a similar thing, but of course, India is still, kind of situated between the U.S. and Russia in that regard. They draw on both for their military equipment and support, and they've been trying to leverage both of those allies since these tensions have started in May. And then, in other countries like Vietnam, we actually see similar things. We see that focus on alliance structures to try and deter Chinese action, but in their own individual capacities, they are fairly threatened.
Okay, thank you so much, Sim. That was really helpful. That's Sim Tak. He's Stratfor Rain Global Analyst. Coming up here, a civil rights giant, John Lewis, is about to lie in state in the U.S. Capitol. We talk with Marty Schenker, Bloomberg Chief Content Officer, about the Lewis legacy. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. John Lewis, civil rights icon and member of Congress for 33 years, is about to return to the Capitol building for the last time, where he will lie in state in the rotunda. We welcome now Marty Schenker, Chief Content Officer for Bloomberg. So, Marty, thank you for being with us. I'm struck by the fact, among other things, that this will be the first time a black lawmaker has ever had that honor of lying in state in the rotunda.
Yes, it is. And, as we were commenting during the break, it is sort of a bittersweet moment to think that John Lewis is no longer with us, but sweet in the sense that he's being celebrated this way.
Yeah, and such a bridge, forgive me the expression given the Pettus Bridge, but a bridge. I mean, he was there on the Pettus Bridge. He was there in the civil rights movement. He's the last surviving member of who talked at the March on Washington with Dr. Martin Luther King Jr., and he's come all the way forward to George Floyd.
It's true, and it's an interesting anecdote about the Martin Luther King speech. John Lewis spoke at that demonstration at the foot of the Lincoln Memorial, and his original draft was a really strong call to action, and it risked alienating the Kennedy administration at the time, so they asked him to tone it down.
We're actually watching a live shot right now of the motorcade going through the streets of Washington, D.C. on its way up to Capitol Hill with John Lewis to lie in state. He was an icon in many respects. He stood for so much for so many people. And he really was an agent for change at a time we needed so much. But it strikes me that so much has left to be done even as he leaves us.
Yes, and he was often gave commencement speeches at colleges where he would tell people over and over again, this battle is not going to be won in a day, in a week, or even in a lifetime, but that the good battle, which he liked to say, was worth waging, and he did it throughout his whole life.
The question necessarily comes, what comes next? What comes after the losing of a true legend such as this? Now, one thing is, as I understand, they're going to introduce a bill, I think today, actually, Representative Clyburn is going to introduce a bill to rename a statute, a voting rights bill that's pending. There also is talk about renaming that Pettus Bridge, because it turns out Mr. Pettus, I didn't know who he was, I'll confess to that, was a KKK member. So they're going to rename a bridge. But beyond naming bills or naming bridges, what things can be worked on in his memory and in light of his legacy that can move us forward?
Well, obviously, I think one of the most important things is how this next election is going to be conducted. The whole issue of voter registration, voter suppression, and voting by mail is top of mind. And, having a speedy, reliable election come November, I think, would be something he would be passionate about. And that's something that I think some members of Congress, or many members of Congress, are contemplating as we speak.
Is that possible, Marty, in your judgment? I mean, because it appears right now, given where we are with the coronavirus, there will be so many absentee ballots, mail-in ballots, and things. In New York, we're still sorting out a simple primary election. Is it going to be possible going through the whole country to have that many people vote for absentee without a substantial delay? And I'm talking weeks or even longer.
Yeah, we, in planning our election night coverage, we're all wondering, will we even have a result on election night this year? Well, I can tell you this, David, if we do nothing, there's a guarantee it will be a chaotic election. There's a lot of proposals in Congress in this new set of stimulus to put money behind getting all the states ready for voting by mail, but it is going to be a daunting task, and if we don't start quickly, it'll be impossible.
Yeah, we're watching right now the hearse just pulling up toward the Capitol building as we speak. At the same time, former Vice President Joe Biden is scheduled to speak this afternoon. He has a very close connection with the African-American community.
He does, and you can see that in the polling numbers. And of course, South Carolina was the tipping point for him in his capturing the Democratic nomination, and it was Representative Clyburn and the black voters he brought along that made it happen.
Yeah, well, certainly this will occupy Capitol Hill for the rest of the day. On the House side, thank you so much to Marty Schenker, our Chief Content Officer. This is Bloomberg.